Good morning, everyone. Ladies and gentlemen, I would like to thank you for joining us today and welcome you at this conference. Today, I would like to speak more about Turkish flights market, but more about HRC in particular, and also to share with you some of our views and some forecasts and expectations which we have for the related markets, which also have the influence on our HRC market. When I say our, I mean Turkish. So let's briefly start. Just a few words on the crude steel production. As we see, in October, we had some inching up. In November, according to the market sources and our own evaluation, we might have a little bit of a slump, taking into account some maintenances conducted by several mills. But in December, we expect a little bit of a slight bounce back. Particularly, it can be connected with some increase of the crude steel production, taking into account that there has been a little bit limited billet availability as a substitution for scrap. A little close? Okay, sorry. Better? Yes, thank you. The next one. This is our own SteelOrbis calculation and evaluation of the crude steel production cost based on the raw materials. I would like to underline that this is something that we do in order not to look into somebody's pockets, definitely. This is something that we are trying to work out and to come up with some instrument in order to have some better and detailed view on where the industry is, where the mills are, what can be the next step, how they will, how they might behave when they are like procuring raw materials, etc., etc. We have similar calculations also for billets, slabs, HRC, and rebar. Just I decided for now not to share with such a wide audience. But if somebody is interested, we would like, it is okay to share. So the numbers might be debatable, but as we can see, the blast furnace route is still in the last advantage compared to the electric arc furnace. And that is basically because of the high coal and iron ore prices. So let's stop a little bit on these two. The coke and coal, metallurgical coal prices, they have decreased substantially over the year, but just because the last year prices were too crazy. Still, they are remaining high since around mid-September. They are still over 300 FOB, today higher. So why did it happen? It's because there has been, the market has been driven by ex-India demand, and that thing is going to continue. Also, aside other, how to say, other issues on the supply side, there was a diminished trade flow from the Russia for the known reasons. Therefore, the prices have been quite high. However, Australia has announced that it is going to put additional coke and coal production of around 9 million tons, which could help balance a little bit the supply and demand in this situation, and it could ease a little bit the coke and coal price situation. So according to official, I forgot, sorry, this one. So according to official authority, which is written over there, they expect coke and coal prices to decrease by around $50 next year. And maybe it will be followed by around another 20 in 2025. But as usual, we will just have to see how the market moves. So another one is for iron ore. Here you can see that obviously the iron ore prices have increased much more compared to the finished steel, or namely to the flat steel, which in some period of time it puts some pressure on the mills in terms of the margins. Why it happened is because China increased its production by 1.4% over 10 months. Also, there was some issues like influence from the futures. Still, despite that we expect, and generally some retreat in iron ore prices is expected, still for now, at least in the coming months, iron ore prices are expected to be quite strong, around over 120, 125. Just one of the big reasons is because the inventories on the iron ore are very low and around below 100 million tons. However, for the next year, most large investment banks they have negative forecasts, and depending on the bank, depending on the entity, they forecast that the price for iron ore will decline from 6 to 23%. But we will need to see. This is scrap and pig iron. This is quite, available figures for everybody, just some evaluation, just to show that where we are on the scrap imports, how the dynamics was. And for scrap, still Europe and USA, Europe including some Baltic countries, is still leading suppliers traditionally. And in pig iron, Russia dominates the market despite the sanctions, simply because there is no other alternative to pig iron. Some Brazil maybe, but for the close delivery, for the short lead time, it's usually Russia. Also, these volumes most of the times includes Donbass. The next one. At SteelOrbis, we have the scrap forecaster. This is a separate monthly product in which we are trying to understand and evaluate and suggest the trend where the prices will go. So how we do it? We basically list, like a long list of what happened and also the factors which we expect to have an influence on the market, and also which could play like in the hands of the producers or in the hands of the scrap suppliers. So we evaluate the collection, we evaluate the flows, and at the end of the day, we evaluate all these factors all together and we put our suggestion. So this is the graph from this month. And basically, our expectation is that the scrap, I'm talking about deep sea premium grade scrap, that it will hit 400 CFR in maybe some deals. Maybe it might exceed a couple of dollars for 100 in some cases, particularly for the US scrap, because US seems to be very positive about this for now. So generally, we do not expect any collapse because there are hardly any market factor in favor of the big drop just today. However, since our Turkish finished steel consumption and demand and sales improved recently, but still the demand is not sufficient, so there will be a certain ceiling over which Turkish mills would not be eager to accept higher scrap prices. So this is our evaluation. Next, going to the flats market. Again, this is just simple figures to show you that we had relatively stable, let's say, production and consumption levels of flats in the recent couple of months. On the consumption side, still there is the pressure from like some industries are not doing too well. Also, a lot of daily business activities are being like taken toll from the financial situation in the country for some economic issues. So, I mean, the numbers actually could have been better. For production, how to say, we evaluate the Turkish HRC mills are working at around 80%, 80-85%, depending on the mill. Again, depending on the facility. Some, as you know, are not working at the moment. Some have just started the production for the new lines. For production, actually, the addition of the new capacities or extended capacities, let's say for HRC, is some issue to follow, because in the medium term, it can provide some or create some shifts between the local demand and supply. Also, in some cases, if you're talking about certain projects, it can create a little bit tighter competition between Turkish HRC producers on exports. But at the end of the day, it will be still, we will need to see how these new capacities will be utilized, hopefully according to the demand. And so, what's next? Next is export. Again, I decided not to give the numbers in 1,000 tons and etc. This is just to illustrate that still European Union and other European countries, which is not member of the EU, are the main targets of Turkish mills and our main market. And this remains crucial for the Turkish mills. However, during this year, as you all know, Turkey has been forced to kind of struggle with Asian suppliers over the European buyer. And at times, this game was not favorable for Turkey. Why? Because our main disadvantage is that we have anti-dumping duties in Europe, different for different mills. Also, the high cost of production, not even because of like blast furnace route or high scrap or something. We all had witnessed the increase of the energy prices, natural gas prices, which Asia did not have, as far as I know. So there is a certain room that Turkey can go below certain levels, and time to time they are not workable against Asian markets. But then again, Turkey has an advantage. First of all, mills are always flexible and always very professional in terms of how to handle I think, all of the requests of the European buyers. Another one is that there is a short lead time. So whenever quotas are coming to close fulfillment, Turkey usually is like a preferred option, same as we just witnessed a couple of weeks back, just so that buyers carry in minimal risks. For Asia, the key advantage is, like, I don't know, sufficient supply. Mostly it's countries like Vietnam, South Korea, Japan, Taiwan at time, India, but not India as much lately. But as I said, there's some lower cost in some cases against some Turkish producers, and also one of their disadvantages, which they have time to time. This is a long lead time. So we expect that this battle over Europe will continue, and I think that we think that next year, depending on how this known project in Algeria will develop, this would be even a bigger problem. Could be not a problem, but just competition will increase significantly because there is, as far as I know, no quota for Algeria, no anti-dumping, so things will be reshaped a little bit. That is expected that they will start commercial production somewhere May, somewhere summer, but we will see how it will be doing. So moving on to imports. As you can see from the numbers, our market is dominated by China, mostly, because this is the most plentiful in terms of allocation and most affordable source of the HRC in Turkey. Of course, occasionally we have some shipments from Japan, some from South Korea. India was not as much in the picture this year. I will stop on it later a little bit. So nowadays, China is our main source of HRC. Here, I would like to step back a little bit and to discuss with you how things changed for the import side over the past 2 years. As you all remember, previously, before the war started, we had FOB Black Sea price as a benchmark for the Turkish market and actually for the whole region, or CIS HRC, let's say, on the CFR basis. After the war started, for the same reason, but for different consequences, let's say, one country's trade flow has been disrupted and another one has been forced or chose to gradually decrease. I'm talking about HRC, right? So I want to give you a short information on both. Here I will not stop at every mill. Just you can see how much capacity we lost since 2014. These first 4 mills, they are operational on and off. They are operated by Russian side. And you can see the products as shipped from Russia's Rostov and Novorossiysk ports, mainly as billets, as pig iron, time-to-time slabs. So this is gone. We do not have access like over almost 9 years. The ones that unfortunately gone since February 2022, when we had the full-scale invasion, it's free, but Electrostyle was not operational at that time. So this is Metinvest's 2 main assets, fully integrated mills. Azovstal is completely destroyed. For Illich, we do not have too much information, like confirmation what's going on. Some say that they are trying to operate it. Some say that it's partly scrapped. So we really don't know in which shape this asset is, which is a pity because not so long ago before the war, Metinvest has finished successfully the modernization of the mill to increase the coil weight, to add the capacity, generally to enter more markets. So those 2 are not, I mean, we do not operate them. So, and here you can see what's left. First 3 is the longs and billets. Then Interpipe is for seamless pipes. Kamet Stal, it's also Metinvest's mill. It's for billets and certain range of longs. And the only flats asset that Ukraine has left is Zaporizhzhia. It is located in the center of Ukraine. It is not far away from the front line, but it's safe for now and operational. So if you're talking about the flats, Ukraine is able to move. There were a lot of reshaping of logistics at the beginning. This is already handled. It's already in more, how to say, more steadily, let's say, they are able to do it. So there is some movements of the ships through the European border that we have with Poland mainly, something through Romania. Some sheets are going, some long products also going, some billet time to time. Some coils are also time to time available for Turkey, and there have been several deals. I'm talking about the extended amount of time, of course. So basically, Ukraine is still able to export, but for sure the flows, they are not so plentiful and they are not so regular, not so steady. And obviously, as the heading reads, because of Russia, Ukraine lost over 50% of its steelmaking capacity. This all numbers is for crude steel. Sorry. So basically, we do not know when the war is going to end and when it's going to end, in which shape we will receive our assets. Again, we do not know what's with the coal. We have, of course, certain mining assets for iron ore still operational in the remaining territory that we control. But there are a lot of issues with logistics, with energy. We expect some more during the winter time. So for now, as it is. So occasional, limited is compared to what we had in the previous years before the war. Now Russia. I will explain. Obviously, Russia didn't lose any production capacity. Instead, they had the increasing pressure of the sanctions, which had been gradually added up by the UK, the European Union, and also by the United States. I would say most of the mills are sanctioned. If you're talking about 3 producers of HRC, 2 of them are sanctioned and have trouble selling. One of them is not in the market at all. So they had some issues financially in terms of insurance. They had some issues in terms of like vessel freights, and also there was a lot of concerns in the market about how they're going to do about the secondary sanctions, etc., etc. But still, they were able to export during this whole period of time. For this data, I don't know if you know, at the beginning of the war, Russian authorities, they closed the official Russian statistics for everybody, including Russians. But this data, which I want to show you, to my taste, it's even more interesting. This is the data which reflects, this is coming from the State Federal Railway of Russia. So it indicates the tonnages for every month which are moving on the railway towards exports. Obviously, this data is not full because railway transportation, it covers only about up to 80% more in the winter, less in the summer. The rest is going for automotive. In this particular case, I excluded the data for the markets of the nearby, like Central Asia, which Russia considers basically as their second local market. This I'm talking about Kazakhstan, Uzbekistan, Turkmenistan, all these kind of countries, because it's not considered as a distant export. So as you can see, the numbers for HRC, which is in blue, they have decreased considerably. If anybody needs, I have data for 2021, if you want to compare how it was before the war, how it became. But to be fair, for the Russians, for the HRC, particularly as of today, they are not exporting as much, but not because they cannot. Some of them can, they just choose not to. One reason is because there is a very good demand in the local market, currently Russian local. So they are able to move big tonnages over there, which coupled with limited capacity, they have a couple of maintenances right now. So they are quite comfortable in local market. Also, they have huge demand coming from these Central Asian countries, which they're also covering. So, I mean, that can give us, a conclusion that whenever their local markets go to flames or something changes, or for example, Russia will abolish or do something with the export duty, which is today from 5 to 7%, which is not very pleasant for the mills, obviously. So in theory, Russia can come back for the HRC exports, at least the ones who are not sanctioned do not have much trouble selling. But for now, they prefer to not to. Then orange is for the billet and green is for the slab. For these two, I would suggest you take the joint numbers of billets and slab because it's very common for Russian statistics that they mix up the codes of the two. But just it will give you just an idea that slab is the most exported part of what they produce. The key markets is Mexico, Turkey, European Union, Asia, and China. Also, they are expected to stay in this market, but there are 2 points. First of all, we need to see what European Union will be doing closer to the point where they promise to put a ban on export on imports of slabs. It's October 2024, if I remember correctly. And also in the near term, the allocation of slabs from Russia will be less. Why? Because one of the mills will be undergoing like 4 or 5 months of restructuring of its blast furnace. So it's already started to stock up some slabs and pig iron. So like half of the volume will not be there. And as I said, for Europe, it will be also how it will be, because there are some, this also includes some supplies within the holding, like from Russia to Europe, for example, which is still allowed. So this is Russia. So, as I said, these two prices from Ukraine and Russia, they have kind of lost the significance of the benchmark. So even there are some sales, still it's not what people are taking into account to evaluate the general market information for this year, particularly. This is China, yeah. This is China, and it took not only the bigger part of the market, not only in Turkey, but also globally. First of all, because they had a considerable increase of the production, while the hopes for HRC production rose by 13% in 10 months. But the hopes for domestic consumption were not fulfilled at the same extent, and the export from China of the hot rolled increased 37%. Therefore, the allocation has been plentiful. It put some pressure on the prices, and we had some high points, and we had some very low points. I think that the lowest in Turkey was somewhere at around 550, 55, maybe a couple of dollars lower. CFR, I mean. Today we are rebounding for China, as you can see in the last section. After, what is it, March, it's been ranging in a very narrow range, like changing every day, like every week, but still quite a narrow range. Today we have some rebound in Chinese offers, and gradually they accepted not only in Turkey, but also in the countries like the GCC, a little bit of Asia. And although some increase in the prices might still be happening, like in the range of $10 to $20 in the short run, I'm talking about in December. Still, since the allocation for HRC from China remains quite big, this would put again the ceiling on the prices from China. And for Turkey, China, as I said, remains the affordable source of the hot rolled coils. At the moment, simply there is no other like that, since Russia and Ukraine are not in the picture and for a long time. And also we need this source because some rerolling company and some pipe making company, if they would like to make some good and profitable exports, they need to balance it with like the more expensive domestic prices for HRC with some more affordable options from elsewhere. So the next two graphs, they are the last ones, I promise. This is again from our forecaster, which we have two, one for scrap, one for HRC. In a similar manner, we prognose 4 prices in it, and we put all the factors, what's going on, what's expected for economy, for raw materials, for all of them, and we make like a price forecast just to show how we evaluate where the prices will go for this and this material. So here you see HRC CFR Turkey and Southern Europe. Southern Europe covers pretty much Italy, Portugal, Spain, and what you name it. So basically for Turkey, We, and I personally, we expect that it will be, first of all, scrap driven. Second of all, sometimes slab driven, because currently there is no cheap alternative if you do not want to deal for Russian slab, which is also not very cheap at the moment. All our other alternatives like Malaysia, Indonesia, Saudi Arabia, they are quite expensive. Still affordable, but expensive. Also for the Turkish CFR prices specifically, one of the main cases like people are talking about, this is a trade case which has recently been announced for the HRC against China, Russia, Japan, and India. So basically, we are expecting to see the preliminary duties quite soon, because it was like on limited period of time that they gave for evaluation, or maybe for some confrontation. So basically, people are trying to assess how it's going to go, what is going to happen. Normally, from what I understand, there is an expectation that Japan and Russia might get some considerable rates. Like, I'm not talking 20 or something, some above 5, let's say, or maybe 5. Again, if the case will be conducted like according to the protocol, and maybe no political things will be involved, in theory, China, I mean, should be getting not such a huge rate, because, like, as I spoke with many of my friends in the market, normally they are adjusting their prices to the local market, to the local price. So we will see if there will be any dumping there found. Still, there is a lot of like speculation about it, and we will see. I mean, if we will, by February, if we will see the preliminary rates, which will be valid for another, so I don't know, maybe up to 1 year. So that might change a little bit the situation, but then again, as far as I understand, if you are having anti-dumping, it's summarized with the import duty that we have, which is 13% for China. But still, it's not subject to be paid if people are using export licenses. So maybe in that case, even if we have like anti-dumping duties for all 4 of them, depending on the rate, of course, so it will be just not just, but it will be a matter of using the export licenses. But at the same time, according to some market data and something that we were collecting from the market, not all, like not the 100% of imports for Turkey imports for HRC is under the export license. So like according to different evaluations, from like 20 up to 30%, it's going duty paid. So maybe if there is considerable anti-dumping duty for China, maybe it will affect these tonnages, but it is yet to be seen. For Europe, I think that the previous speakers also gave some like economic outlook and how the consumption is going and everything. In the short run, we do not expect a huge rollback. Actually, people have some hopes that Europe will have some additional restocking, let's say, maybe some holiday lull, etc., etc. For now, I mean, also there is a little bit limited allocation because in the import, because not all the mills are present. Some of the mills, like Egypt, they haven't been increasing prices. So for now, we are quite positive. For Turkey, if we are talking about China, today we are at around 600. Maybe we will fluctuate between like 590, 85 to 600, 605. And we forecast in the same manner to HRC for India and for China. For China, I said a little bit because, I mean, normally there is some governmental stimulus and also some production, could be some slight production cuts due to their target to curb the pollution. But still, the export allocation will be still there and quite plentiful. So the general expectation is that the workable prices will not go far above, like maybe 550, 560. Then again, we should understand that the low prices for Chinese are also contributed by non-VAT trade. And I'm talking about workable prices, tradable prices. We have 2. We have one tradable price for China HRC and one from the big mills, which obviously differ. And for India, as you know, India has not been in the picture for several months now. Generally, we are expecting that they will come back in December, but taking into account that their local market is still doing quite well, we expect that they will be not aggressive in the export once they come back to exports. First of all, they will target the markets which they have bigger profits, Europe, obviously, and also maybe GCC. It's better for the geographical proximity. Also, India is the main source, now substituted with others. So, I mean, Turkey would not, like to my understanding, would not be the first option. But then again, we need to see how the things for others will be moving. For China, how we will have the anti-dumping, scrap, slab, etc., etc. So, thank you for your attention.
Thank you very much, Anna. Obviously, I have no questions for Anna because I asked my questions last week and earlier this morning. Is there any other question? Mikrofonu alabilir miyiz?
Anna, thank you for this wonderful presentation. You had a lot of information. I was kind of surprised seeing that the Russians are exporting slabs to Mexico.
Yes.
And then these slabs, I believe, convert into hot rolled coil and shipped into the US somehow. Then Europe is buying and Turkey is buying, although each European importer nowadays is asking confirmation from us that there are no Russian input in our steel that we ship into Europe.
Yes.
So what do you expect this Russian material will be ending up?
Well, for Mexico, generally it's usually Mexico, sometimes some other Latin America. Two of the mills, I'd say, are quite active, but this is occasional. They sell time to time. It's not like every month they have 150,000 tons of orders. Probably, I mean, some of this material can be seen in the US market. We did not actually get any notifications that USA is checking very thoroughly. There have been time to time some issues, but not particularly for Mexico. For Turkey, how to say, for Europe, I understand that there is some cautiousness, and first there was a little bit of panic. As far as I understand, there is no official regulation yet that you cannot import to Europe something that you made or produced from the Russian feedstock. But I hear from my contacts and everything that, as you say, people started to check even for the cold rolled, even for coated steel, in case some Russian HRC are used in this. For slabs, I would believe that if buyers would be cautious, still we have markets which are non-European, non-EU, which is not sanctioned, so you still can sell this material from the cheap slab to Egypt, to Libya, Morocco, Algeria, some non-EU countries like Macedonia, Kosovo, or something. This is not the huge trade flow, but I believe, and there is no official regulation, but I believe that people are getting a little bit more cautious with that. And as you may have noticed, we get more offers of alternative origins, like Saudi Arabia is in the picture, which is an interesting one. So, I mean, but it depends on how affordable prices for Asians are, because Asian mills, especially Indonesia and Malaysia, they have again Latin America. They sold huge volumes to Europe. So if they sell their huge bigger allocation to other markets, Turkey gets left with high prices, which still can be matched, but
Thank you. Any other questions? None, I suppose. So thank you very much, Anna.
thank you.